investment spreadsheet will show how it's possible to achieve a return of 492% on funds invested over a 25-year period. We look at two spreadsheets to conclude this. The first spreadsheet shows a 10-year interest only on a 70% mortgage, and the second spreadsheet shows a 15-year fixed repayment loan, again on the 70% mortgage. So based on the total net price for the apartment with parking at €165,219, with the VAT at 19.66%, bringing it up to €197,602, with furniture the net price at €5,485, with VAT amounting to a total of €6,560. The total net price for the one-bedroom apartment with parking with furniture is €170,704. With VAT 19.6%, the total VAT inclusive price is €204,162. The legal fees at approximately 4% is an additional €8,166, bringing the total VAT inclusive price to €212,328. However, under this scheme, the Residence Tourism Scheme, the developer is funding the VAT, so the investor pays up only to the net price, and with legal fees amounts to €178,870. So we're looking initially at the 70% mortgage on an interest only for 10 years. So the mortgage at 70% is €125,209, and at 5.65% interest only, this is costing €7,387 per annum. The net return is 4.5% on the total net price with parking and with furniture, which amounts to €7,682. Now the management company Sella, they pay the investor the VAT inclusive rental income, where the VAT on rental income is 5.5%, which on the €7,682 is an additional €423. However, this €423 must be reimbursed to the French VAT office once per annum, which is leaving you with a net return of €7,682, which is the 4.5% on the 170,704. Now the rental income is index linked at 1.5% as per the commercial lease, and after your accountancy fee, non-refundable charge and land tax fee, we can see that the net return after your expenses is €7,042. However, the land tax fee is exempt for the first 2 years. So from the net return of 7,682 less your accountancy fee for the first year, we can see this is a surplus of €75, where the net return is slightly greater than the interest only repayments. And for the 10 years, we can see that the interest only remains constant, with the rental income indexed at 1.5% per annum, increasing each year to effectively grow to €8,255 after year 10. So the total initial personal contribution is €53,661, where we're assuming a 5% growth per annum on the property, which is keeping in line with inflation. So now switching over to the 15-year repayment loan, we can see how, again, the initial personal contribution was €53,661 based on the 70% mortgage. However, the repayments have now switched to capital and interest fixed at 5.65% over 15 years, which is costing €12,598 as compared to €7,387 per annum. So with the rental income now increased to €8,378 at the indexation of 1.5% per annum for the first 10 years, we can see that that return has now increased to 4.91% on the original purchase price as compared to 4.5% on the original purchase price. So on the rental income, index linked from the €8,378, again after your annual fees are paid, we can see a shortfall of €4,440 from year 11, which is €370 per annum. The second year, or year 17, we can see the net return of €8,208 against your fixed mortgage repayments of €12,598 shows a shortfall per annum for that year of €4,318 or €360 per month. So for the total shortfall for the 15 years before the mortgage is paid off, the total personal contribution from an initial €53,661 plus the shortfall per annum for the 15 years is a total of €110,096. This is where we're showing there's a potential return of 492% on the funds invested over the 25-year period, where the value can grow to €541,703 compared to €110,096, giving a return of 4.92 times on your funds invested.